All right, what's going on, guys? So today is more of a obviously psychology based teaching. I'm not really going to be talking about the charts at all. So, if you're expecting anything about the charts and stuff like that, um, that's not what we're doing today. Um, but what I do want for today is to be more like an open discussion format. I don't want to just be here just talking for an hour straight. Um, But my goal is if you're in here today, my goal is to change your perspective on what you think of money. This is an exercise that I've gone through with some of you guys before, but we need to deconstruct the societal norms of the value of money, and we need to give it our own definition. And, through my mentorships, working with like 50 plus people within the past, like, what was it? When was the first one? August, September-ish. So in like the past, like working with about 10 traders a month, essentially. A lot of people are very risk adverse because of their belief of money. And the simple solution is always to just trade smaller. If you guys know me, I trade the smallest position size that I can trade because I'm copy trading on multiple accounts. So $100 on one account is like $1,000 if I'm just trading 10 accounts. So we need to reconstruct our mindset. That is step number one. So I want everyone in here or everyone who's going to watch the recording to have a willingness to gauge your perspective of a belief system that you maybe had your entire life and be willing to change all that you thought your entire life because that's what's going to be the case for some of you. So depending on how old you are, depending on how much bills you've paid in your life, depending on all these circumstances, it's either going to make it more difficult or someone like me, I'm always open to being wrong, So for me, it wasn't too difficult. But if you have, it's like a habit. If you have habits and it's hard for you to break bad habits, then your perspective of money shifting is going to be a difficult thing for you to do. If you tend to be a more disciplined person, maybe you work out consistently, you have a clean diet, or, you have some type of routine or regimen that you follow, and you don't allow any circumstances to break that, then you're most likely going to be successful. And that is the simple defining characteristic of the successful trader versus the non successful trader. How long are you willing to be consistent to see the results? Don't jump between strategies. Don't jump. Like, how long are you willing to do the same thing until you see success? Okay. So, what we're going to be talking about today is pretty extensive, but I'm going to try and get through it as quickly as possible. Let me just stop this for a second, pull up my notes. All right. I got all my notes. I don't want to miss anything. All right. So, you guys should be seeing the PowerPoint right now. If I'm looking back and forth, it's because I'm checking to see um, the chat and if anyone else joined. If you have any questions, feel free to interrupt me or message in the chat. It'll be quicker if you interrupt me versus messaging in the chat, but please allow me to finish my thought before interjecting as much as possible. I'll occasionally leave pauses in between each concept, and you guys will know when the pauses are. Try to keep your mics muted as much as possible until you're ready to speak.
1.9, your favorite throwback today.
So before we get started, do we have any questions? All right, so when you watch this back, the slide numbers are going to be here at the in the middle of our slides, and you can always just pause here, look for what it is that you find most interesting or something that you want to circle back to, and then look for the concurrent slide that relates to what you want to talk about, what you want to review of what we talked about. So the very first thing is if you don't get nothing else from this webinar, this is what I want you to get. If you can't stay for the whole webinar, then this is the one part that I want you to get. That's why it's at the beginning. And I want us to do an exercise that requires some participation. So if you're willing to participate, please participate. Okay, so we have different tiers of money: $20, $100, $1,000, $5,000, right? Not everyone here has a personal relationship with me, but if you do have a personal relationship with me, you know I'm a very giving person, right? So we're going to use me as an example, and as much feedback on this slide as possible will be more beneficial. So if I just gave you $20, how would you feel about me giving you $20?
I'd be grateful for the free meal.
Okay, so it's a free meal. $20 is a free meal. Okay.
I would definitely be grateful and thankful for it for sure.
Mm. Would you feel like, oh man, my life has changed, man. Monty gave me $20 and damn, like I don't know, like this is a game changer for me. Or you're just like, you got me lunch. I appreciate that. And then maybe like a month or two, you'll probably forget that you even got those $20. Now, what if I gave you $100? How would you feel about that?
I'll be more grateful.
What can you do with $100? Like, what's the first thing that comes to mind where you're like, okay, $100?
Mike can pay a water bill.
That was my answer, Tony.
Okay.
That's funny. All right, cool. So pay some bills. Okay, say I gave you $1,000. What would you think of it?
Hey,
How
we're
did
in
you
the
give me a
money
thousand
now.
dollars?
I say, hey man, look, I seen how hard you've been working. I know you're struggling with the trading. Look, I'm gonna help you get stocked up on some accounts. Here's $1,000 to jumpstart. You know what I'm saying? Everything you invested in the mentorship and all of that, I'm gonna give you that bread back. I just wanted to know that, you really wanted you really wanted it, and to see if you wanted it, I charged. You got through it. I'm gonna give you that bread back. How would you feel about that?
Yeah, I would definitely take that as a blessing too and capitalize on that. Be like, well,
Mm-hmm.
you know what? I got this money back. Let me go ahead and reinvest it, like you said, into some more accounts and capitalize some more. So I would
Okay.
definitely take that as a capitalization move right there. I appreciate that.
All right, let's just say you've been my boy for years or you've been my girl for years. And I'm like, yo, you know what? I just had my biggest payout. I want to share this moment with you. Here's 5 bands. Here's half my payout. You know what I'm saying? Like, be wise with it. What would you think of that? What would you think of that gesture? What would you think? What could you do with that money?
You'll be my new favorite person.
I'd be looking for Ashton Kutcher.
That girl say she getting pranked. Oh man. So now we all have perspectives on money and things we can do with it, right? So my question would be now is what does money think of you?
Nothing, because it's just an instrument. It's nothing. Money don't think of us.
Yeah,
It's a tool.
it's just a tool, right?
Right.
So your entire emotional response in the market is 100% based off of what you think of money because money thinks nothing of you.
Right.
And if you can truly grasp that concept, it will impact your trading in an extremely positive manner. Okay? I'm very confident in that. If you could get this out of here. If you could understand that concept and apply it to your trading and understand that money thinks nothing of you, a lot of the decisions that you make will be a lot more even keel. Your heart rate won't be going up. You won't be nervous. Like I know how you guys feel. I've been there. I've been there. You close to payout. You know what I'm saying? Now you cutting the trade, a little bit of drawdown, trade end up winning. You're like, damn, why I just ain't stay in the trade? Or you do something stupid and then you blow the account and you was going, pass the eval or anything of that nature. All of those decisions that you make outside of your system that include execution and fear means you haven't accepted the risk, right? Now, everyone that's been part of the mentorship that I told to do what I do, like go back, trade the 15-minute chart and trade $2 a point. Everybody that's done that has been shocked at how easy it's been, right? And the thing with trading is it's all the same. It's just what you think of it. So if it's easy for you to trade with $2, then it should be easy for you to trade with $20. And it should be easy for you to trade with $200 because the money thinks nothing of you. It's only what you think of it. And if you think of it the same, then your execution becomes the same. Now, that might seem counterintuitive because the whole reason why we are trading is for money. So for me to sit here and say I don't pay attention to the money when I'm trading is kind of absurd to say, but it's the reality. When I'm trading, I don't see my P&L. When I'm trading, I just see the points. So you have to get to a point where you understand that money thinks nothing of you. And if you're putting on a trade and your heart's beating fast and you're getting nervous and you're cutting the trade and you're feeling frustrated, you are trading too large, one. And two, you don't really have a true understanding of the purpose of money. Money is just a commodity. It's just an exchange of goods. It can be an exchange of any value of any item. It just depends on what you value it. And for some reason, because you see a number on a piece of paper, you give it a value because of the exchange and the commodity within whatever community you live in, whatever, right? So, for example, if I go, um, I will give you my laptop if you give me this pen. Who would be nervous about that deal? You're going to give me your pen and I'm going to give you my laptop. No one's going to be nervous about that deal. That's a good deal for you because the pen, the value that it has for you, whether you attribute it to something monetarily or if you contribute it to comparing, contrasting the laptop, it has less value. And when you're exchanging something of less value for something of greater value, you're not going to be nervous about the situation, right? Because you understand it. Now, there's always going to be uncertainty in the market. But what's going to separate you is that indifference. I'm not saying don't have emotion. I'm saying when the emotion arises, you make decisions based on the emotion. So for me, for example, if I get in a trade and my heart's beating fast, my immediate response is I should probably get out of this trade, just cut it because that's not normal. Something's wrong here. I may not be able to identify it right away, but something's off. Something doesn't feel right. So I'll cut that trade early, or maybe a trade is just taking off. Boom, I got in the trade, it's taking off. It's going straight to profit. It's about like 5 points away from profit. Normally what I do is if it gets like real close and it pulls back, then I just cut it. What I've trained myself to do is in that same scenario where if I get in a trade and one bar just takes off and hesitates, instead of cutting it, I extend my profit target. And you'll be surprised at how much more money I make by calibrating my expectation based on my emotion and creating a game plan. Now, those of you that know me know I am extremely systematic. I am extremely systematic. Everything that I do has a process, even in the discretionary stuff. So you guys, when I look at my lower time frames, even on my lower time frames, they're systematic based off of market structure, right? So even if I'm taking a trade that doesn't necessarily have a bar painted signal, it's still market structure. And if you know me, I only trade three market structures out of the six. So it's a 50-50 chance. And most times, even if it's a good setup, I'm probably going to ignore it. I only try and take the best setups because I want the best value exchange for my finances. Okay. Like if I'm going to be putting money into the market, then I want to make sure I have the best probability of making a return. And sometimes it's going to cost you a little bit extra, but that's fine. As long as you understand that money in and of itself, its value is 100% based upon your belief of its value, then your perspective in the market is going to change. But then you can argue, well, even if I have a different perspective of money in the market, that doesn't mean the people around me has a different perspective of money in the market. And that's true. And that's why 95% of traders lose money. So if you're comparing yourself to the large group of people that are in the trading community, most people aren't making money. Most people that I know that make money trading are quiet about it. Like I'm introvert and I don't like being around a lot of people. That's just me. Then there's people who are extroverts that just like to always go out and party. That's fine. But the people I know that's doing real business moves and like really trying to have that time and financial freedom, you don't hear too much what they got going on. Like even with me, like you guys really don't really know the scope of what I really got going on because it's not for everybody to know. You know what I'm saying? And everything that I'm doing with the coding and stuff like that is for me to do. And then there's people who hit me up and they ask me for help with their coding, and I'll help them out with their coding, right? There's certain rewards that come, but they won't come unless you speak up. They won't come unless you speak up. So my recommendation is if you're still struggling with money and your perspective of it after the webinar, just DM me on Telegram, whatever. But the reason why I'm spending the most time on this is because if you cannot change your perspective of money and the value that it represents for you, then what's going to end up happening is you're going to get in a situation where you're going to see a trade and you'll be like, oh, the market's too volatile, the market's too this, that. And you don't take the trade. And then maybe you see a less volatile trade and you take that trade and then you end up losing big. Because you lost big, now you're spiraling out of control. Now you're over trading, trying to get it back. And an account that was $100 away from payout is now $100 away from being blown. This all comes with emotional discipline. Now, because of that, the first thing you have to understand is the profit gap. Now, the profit gap is one of the most psychologically demanding journeys that a trader is going to have to go on, independent of any external assistance. Because the profit gap is based off of the potential you see of yourself, where you are in your life, the results that you want, and where you fit within that realm. So these are the results you want. This is the potential that you have, and you're somewhere within this gap. Only you know where you're at, right? And the thing is that it doesn't necessarily help you by knowing more about the market. I'm pretty confident in general, majority of people that I've worked with, except for the absolute beginners, everyone that I worked with anywhere of at least a year of experience have enough understanding of the technical analysis to be profitable. The issue is up here because you might go on a win streak and you're making money, making money, making money, and then you go on a lose streak and you lose more than you made. Why is that? Is it market conditions? Well, if your risk is already categorized and everything is pre-made before the trade, then you've already put it in your edge in your system to withdraw a specific amount of drawdown. So why is it that you haven't approached that drawdown yet your account has lost more money than your system would have allowed if you followed it? That tells me you're not following your system. My system allows me to have 10 consecutive losing trades to blow the account. I've never had 10 consecutive losing trades. I've never had the most consecutive losing trades I've ever had in my entire trading career is three. I've never had more than three consecutive losses. So I've given myself more than triple the opportunities. I really got to tweak. And, you know, 2026, for some reason, I don't know what's flipped the switch for me personally, but since 2026 has hit, I've been on point every single day, no tweaking. Like every single trade, every single man, every single everything, to the point where I started coding to make the bot trade for me. I'll just be watching now. You know what I'm saying? So you have to get to a place where you understand that the results and the potential, and where you are in the middle isn't going to be reflected in what you see in the physical. Okay, this is important. You're going to grow and develop in your mind long before you see the results. You're going to feel like you're a profitable trader long before you're profitable. And it's going to get to a point where you're going to get, well, for me, you get frustrated because you're like, yo, I know I can do this. I know I'm good at this, right? But why can't I be consistent? That's the key question I want you guys to ask yourself. Why is it that you can't be consistent? And I don't even mean with just the trading. I mean, why can't you consistently be on the chart every day? Why can't you consistently backtest? Why can't you consistently study the materials? Right? Why can't you consistently meditate? Start simple. Why can't you consistently trade on simulation mode? If you can't be consistent in these little things, I'm telling you, you're not going to be successful in trading. And the thing with trading is majority of what you have to do to be successful is completely counterintuitive to what is natural to you. Okay? You got to understand the reason why people make doctor salary, lawyer salaries, million, all this is because there's a large majority of people who are donating their money. It might not feel like they're donating their money, but that's what's happening, right? Friday, everybody's looking for sells. I took a buy and just let it ride out the whole day because of my simple system. Why was Monty looking for buys? Well, if you know me, at the bottom of a trading range, what am I doing? I'm buying. Where were we at? The bottom of a trading range. Why? Because 80% of breakouts fail. So I'm not going to bet on the breakout. And that's just my system. So what did I do? I waited for the break and retest of the prior day high, and I got in. There was open gaps. Bears were likely trapped. Everybody's talking about sell, sell, sell. Psh, I just let that thing ride the whole. I said I had text my cousin. I was like, yo, that thing's probably going all the way up here. It's gonna take forever. I'm done. Looked at the charts later and went straight over there. Now, I'm not some guru or nothing like that. I'm just saying that if you trade the probabilities and you understand that the success is going to happen here first, don't worry about anything else. Don't worry about what anybody else is doing. Like, that's why my trading community is the way it is. My trading community is made for you to be an independent trader. I don't want people coming in there being like, oh, are we taking this trade? Are we taking that trade? Are we doing this? Are we doing that? Is this a good trade? Is this a bad trade? What should I do here? No, we want to see results. After you're done trading, tell me what happened and then we can improve. I'm not here to hold your hands, right? There's going to be a time where I'm no longer going to be a part of you guys' lives, right? I'm not going to be doing this for 5, 10, 15, 20, 30 years and we're just going to constantly be having Zoom calls. Like, let's be real. The mentorship for to be honest ended back in December, but I want to help out so much that I don't mind doing stuff like this because at the end of the day I love it. I enjoy it. But I want to set you guys up for success. And the first step to success is thinking independently. I need to be able to do this on my own without depending on anyone else. And if you're depending on me for anything, you're going to fail. I'm telling you, if you're depending on me for anything in your trading journey besides the pre-recorded videos and the indicators, you're going to fail because I can't trade for you. I won't trade for you. And if you know me, I'm chill, but just like when I need someone to get out my way, just get out my way. You feel me? So key point, it starts in here. I need you guys to start in here. I need you to open up your mind. So the question is now, well, how do you open up your mind? This is the book I just most recently read. I recommend it. I'll send a link to it when I send out the recording email. It's pretty expensive. It's $35, which is pretty expensive for a trading book. That's not like it's just psychology based, right? And it's called when super traders meet kryptonite. And it's not artsy at all. But if it's anything of reminiscence of a stock operator by Jesse Livermore, this is the more modern version where it shows a bunch of traders, their journeys, their pitfalls, everything that they've been through. Is pretty much the next version of Market Wizards. And you can see all their failures, all the dumb stuff that they've done, all the recommendations that they made for you to avoid is in here, right? Learn from other people's experiences. There is this, so this is 4 columns, 1, 2, 3, 4, 5, 6, 7, 8, 9 rows. 36 stories is in here. So 4 columns, 9 rows of stories, all different trading journeys that go extremely in depth. I highly recommend it because you might be going through one of those things, and more than likely you are. So if you want a cheat code to all the processes of emotions that you go through as a trader and how to overcome them, then this is it. Me reading this after, my trading journey of becoming profitable, it was like, yo, yeah, this kind of outlines everything. Like I remember, I was reading, I was like, yo, I remember that. Damn, I remember that. Damn, I remember that. Oh, I still do that. Shouldn't do that. Okay. Oh, trade smaller. All right, trade smaller. When I say trade smaller, I went from risking $500 a trade to risking 150 to $200 a trade. And I make more money now risking that. And the reason being is not because I'm trading anything different or any better, anything crazier. It's just now when I'm in the trade, I don't care no more, really. Like I feel it even less. Like I didn't care when I was risking 500. I really don't care when I'm risking 150. You get what I'm saying? So because I built that tolerance up over time, for me personally, when I'm in the markets, it's like, like, and if you guys know me, I work at a school job with middle school kids, and I'm wrestling with having to retire because I love that job. You know what I'm saying? I love the people that I work with. I love the staff. I love the students. Like I don't hate my job. Like I wake up excited to go to work. You feel me? So, but it's getting in the way of trading now. So it's like, do I just finish it out and get that student loan forgiveness, or do I just bang it? Regardless of the fact, you need to have a clear mind, and another easy way of doing that is having supplemental income. So I'm fortunate enough to enjoy my supplemental income, but you need to remove the need for money. However you do it, you need to remove the need for money, which is crazy to say because the purpose of trading is the need of money. But if you go into trading with the approach for the need of money, you will lose money. Because why do most people go into trading? The need of money. And what do you know about most people who trade? They don't make money. I am telling you, me personally, the reason why I trade is for time freedom. I want to be able to do what I want to do, when I want to do, with who I want to do, where I want to do it without anybody telling me I can or can't do any of what I want. And the only way for me to achieve that is to make money. If that required making peanuts, you know what I would be doing? I would be making peanuts. If that meant that I would have to be a sewage operator, going in the drains and cleaning out manure, you know what I'd be doing? I'd be cleaning out manure because I don't care what's required for me to have that freedom that I desire. It's not financial. Get the financials out of your mind. I can't express it enough. Until you stop caring about the money, until you stop caring about the money, you're going to continue to struggle. I guarantee it. This was one of the most, like, what separated me from being break even to get into that realm of making money is that I just stopped. I really, like, I don't want to curse, but I really stopped giving the, you know what I'm saying? And then, with platforms, I don't care if I blow this account. I don't care if I lose this money. I don't care about anything. I just want to learn the skill. And that's what's most important. The skill is more important than the money. Okay? Do not focus on the money. I am begging you for the sake of your sanity. If if you have the link to that video, can you drop it in the psychology section in our Telegram group? All right. So, step 1. Now we know we need to change our mind. But we need some actionable steps, right? Everybody's like, "Oh, this is what you should do. Do this, do this, do this." All right, nigga. How? Like, you telling me to do it, but how? And that's always the issue. And I feel like with my students, when I'm teaching math, the reason why they generally do so well is because I always tell them how and I always tell them why. So, first thing you want to do is you want to change your mindset from thinking on a one trade basis. This is a process. You have to think probability. So let's start simple. Let's start with 20 trades. I require a minimum of 100 trades. 100 is the bare minimum. And even with 100 trades, there's still room for error. But let's just say, for the sake of discussion, 20 trades is enough. Okay. And you know that in your 20 trades, you're going to win 70% of the time. And you're risking $1 to make $1. Out of 20 trades, you win 14, you lose 6, right? That means you made $8. Okay. So your expectation is over 20 trades, I'm going to make $8. If we times that by 5, that's 100 trades, that's $40. So your expectancy is every 100 trades, you should be in profit $40. Start there. Okay. What is your expected win? What is your expected loss? Are you trading 1 to 1, 1 to 2? Is your risk more than your reward? Et cetera, et cetera. Start there and then create a 20 trade outcome. What's your win rate? And what's your expected ROI? And what's your MAE? MAE is max drawdown, max adverse excursion. So, how far does price go against you in the worst case scenario, excluding hitting your stop loss? Because obviously that's worst case scenario. But trades that don't hit your stop loss and win, what was the max drawdown? Once you determine the max drawdown, determine how you can minimize your losses. And the easy solution is adding a second position into drawdown. But don't just add a second position randomly. If you guys know me, everything is based off of ratios. Every pattern is a different pattern size. Every ratio is different. So I created an indicator that draws the ratios for me automatically. Then you have to deal with adjusting risk. I coded an indicator that does the risk for me automatically. You're like, well, Monty, I can't code. Go on YouTube, Google, ChatGPT, figure it out. The same way I figured it out. I didn't know how to code at a point in time. All right. So that's where you start. You start with 20 trades, you break them down. Now, What you have to also accept in a probabilistic mindset is we have a random distribution of outcomes. You don't know if your next trade is going to be a winner or a loser. When you enter the market, what are you thinking? You know what? Let's stop right here. Let's pause right here. I have a question. When you enter a trade, what are you thinking about that trade when you execute? I'm curious. What's on your mind? I'm gonna go get a drink of water. I'll be right back. Tell me what's on your mind when you execute a trade. Think about it. All right. So when you take a trade and it goes order filled, what's on your mind? What are you thinking?
Gotta hit my take profit quickly.
Okay. Reasonable.
What can go wrong?
What can go wrong? What can go wrong? Okay, so one was hit my profit, two, what can go wrong? Okay.
Sometimes it depends on if I'm already in profit for the day or not.
No, no, I'm saying no, no, I'm saying that very first trade.
Mm.
Very first trade.
It so then for me, it depends on where I'm at with the overall account. Like, am I, you know, towards the max, or am I in drawdown of the account overall from just day to day? Um,
Yeah,
Sometimes I'm a
I
little bit more
believe that.
nervous if I'm already down on the account.
All right, so give me a second.
For me, is how much I'm finna make on this trade.
Okay. All right. Anyone else?
Yeah, for me, I think I've stacked it in my favor, but there's always that chance that it's gonna go against me, and where am I gonna cut it at?
Okay.
I'm the
Okay.
same with Marsha.
Mm-hmm.
Thinking the
Okay.
same.
Okay. Anyone else? There's no wrong answers. I'm gonna highlight the commonalities and everything that everyone here has said. But I just want to see if anyone else has any input that might digress from summarizing everything into one simple thing. Okay, so what that sounds like to me is everyone that mentioned anything, you're all trading your P&L. Every last one of you, you're worried about the money too much. Where's my account at? Is my account in drawdown? Oh, if it goes against me, where am I going to cut it at? Oh, I just wanted to go to profit. Why do you care? That's not part of why we're trading. We're not here. All that stuff is cool, but all that stuff is the beginner stuff. If you're still worried about that stuff, you haven't allowed your mind to go beyond. Okay, you have to let your mind go beyond. What I'm thinking when I'm taking a trade is this trade has an 80% chance of being successful, and I'm willing to risk this amount of money to find out. I don't know if it's going to be a winner. I don't know if it's going to be a loser. I honestly don't care because I know over 100 trades, 200 trades, 1,000 trades, 5,000 trades. I've back tested the data to know that I'm going to make money. So each individual one trade has no emotional bearing. It's have I been consistent over a series of trades? So the focus isn't necessarily that. The focus is over 100 trades, was I disciplined? That's what you need to start asking yourself. Okay. If you have an edge for the trade and you know if you've done my mentorship, any of my mentorships, we know exactly what system we're trading. We know exactly what signal we're trading. We know exactly where we're entering the trade. We know exactly where we're adding another position. We know exactly where we're cutting the trade. We know why we're going to cut the trade early if it closes in the danger zone. And we know all our multiple profit targets. And we know the probability of success based on the time of day. And we also know if we pay attention to the breakout bar, it can increase our probability. And we also know that if we look at the 5 minute chart, we can look at those patterns based on the IBS and make a decision whether or not we want to take the trade or not. We have all these things in place. And what you're worried about is your stop loss going to get hit? Is my profit target going to get hit? If there's drawdown where I'm going to cut it, we already know these things. We already know where we're going to cut it. We already know how much money we're going to lose. We already know how much money we're going to make. What you should be focused on is this a high quality trade? And I willing to risk X amount. Once you hit that button, your immediate thought process right after you enter the trade is this has a X% chance of being profitable, and I'm willing to risk this amount of money. And this is how the trade is going to be managed. If I go halfway into drawdown, I'm going to add a second position. If in drawdown it closes beyond halfway, I will cut the trade if it goes lower. So, like, say you have a candlestick, right? So, say this is our candlestick, whatever. And then let's just say this is our entry. This is 50% drawdown. This is our stop loss. And then this bar closes inside the danger zone here, right? If the bar closes inside the danger zone here, you don't just close the trade. Oh my God, I'm going to get out the trade. I'm scared now. No, chill out, bruh. All you got to do now is just take your stop loss from here and put it right here. And then just let the trade play out. That's it. That's the system. That's all you have to do. So if you're talking about, oh, drawdown and where I'm gonna cut it at, you already got that, right? It closes in the danger zone. You just move your stop to the adverse bar. And if it breaks that low, you know what I'm saying? You're out to trade because there's most likely gonna be sellers if you're buying here. If you're expecting a buy move and then you get a strong bear candle and we break down and this bear candle has a good strong bearish IBS, especially if it's 31 or less, then you probably want to cut the trade because you know it's most likely going to go against you, right? You have all these, everything that we've spoke about, you should already have these systems in place before you enter the trade. Okay. So transform your mind, right? First, we're looking at our value of money. Then we see where we are, our potential and our success. And then now we constructed a mind built for trading where we're thinking in probabilities and random distributions of any sample size that is greater than one. It must be greater than one. We don't care about one trade. One trade is not going to change your whole trading career. I mean, it could if you blow your account, you know what I'm saying? But in general, any mistake that you've ever made, I've probably made it 10 times worse. I excel in being a genius level moron, right? The stupidity that I do exceeds the normal stupidity of human beings because when I go all the way. So you can't be doing stuff as stupid as I was doing. Trust me, you're all at a good place. Now, your trading brain, there's two systems at war. So now we're getting into neuroscience, okay? You have your prefrontal cortex and you have your amygdala. Your prefrontal cortex handles your rational decision making. It's more analytical. It controls your impulses. They say most experienced traders operate and rely on that region. Your amygdala, or as Dan Howe calls it, your reptilian brain, right? That's your fight or flight, right? Because you know, if you go back, not to get too deep into it, but ancestral type of research where what we needed to do to survive and how finances and food were literally life or death situations. You weren't just hopping in your little Toyota and driving over to Publix and ordering a chicken tender sub with ranch. You see what I'm saying? Like you couldn't just go to Polo Tropical drive-through and order some rice and beans. Nah, these niggas was fighting animals, woolly mammoths and stuff like that. Right? If you think dinosaurs are real, I don't know. But they had to get their food from somewhere, and it wasn't the grocery store. I know that much. You see what I'm saying? And these two systems are always at war. Your emotions want to take over, and your rational thinking is like, why am I doing this? What am I doing? Get out the trade, bro. What am I doing? And you sit there and you watch your account go to zero, and you know you're tweaking. You know you're messing up, but you're just watching it because emotionally it's too painful to let go. So, how do you take care of that? Me, personally, I did mindfulness meditation. I did it for about a year, and I would just wake up and I would just clear my mind for the day, and I would just try my best to just be empty. And I would go into the trading day empty, right? And I would, do my breathing, whatever. And then what I did in the beginning was when I took a trade, I would get up from my trade desk and I would walk my community for at least 5 minutes because I wanted to allow at least the first bar to play out when I was on the 5 minute chart before I started trading the 15 minute chart. Then when I started trading the 15 minute chart, it was so much easier for me personally because it was less management, less emotion, less heart rate, less losses, bigger wins, higher percentage. And all of that is affected by one simple thing, okay? Pay attention to this. Your position sizing. How much are you risking on your trade? Size down just a little bit, and see if your trading improves, right? If you're trading 5 contracts, just go to 4 contracts. If you're trading 3 contracts, just go to 2 contracts. Just see how it feels. And I guarantee you might more than likely have some type of improvement. Now, how can we use the amygdala to our benefit when our prefrontal cortex is the system we need to ultimately win the war? You make them become friends so that they're no longer at conflict. And you manipulate your emotional amygdala to benefit your rational prefrontal cortex. What do I mean by that? Oh man, I'm $100 away from payout and I wanted this, that, and now I'm doing it. You know what that tells me? Marlon, you shouldn't be trading today. So I don't trade. I have a big win. I'm like, damn, bro, I just made a band in 5 minutes. Yo, all right, where's the next setup? Yo, I'm that. When I do that, I end up being down a band by the end of the day. So when I have those type of wins, nigga, my day is over with. I don't care what's going on. I'm out. I will figure that out on the next trading day. Okay? Because on this trading day, I'm walking away with this band and ain't nobody could tell me nothing that's gonna make me get this up because this is damn near what I make in a week at the school job, right? This week in trading, I made more than I make at 2 weeks in the school job. So why would I give that back? After taxes, after everything at the school job, I make about $200 a day. If I make anything more than $200 a day trading, I'm done. Why do I need to be in the market? I already live a good life off that salary. So if I could just match that salary at a minimum, then I could quit my job. That was my first thought process. And now making $200 doesn't feel that crazy to me. Making $200 is a bad day. It's like, damn, I only make 200 a day. And that's where you want to get your mindset at. Now, within that process, naturally as humans, there's going to be an emotion that tends to overpower the other emotions, right? So I'm trying to structure this in a way where everything is like, you see what I'm saying? So I'm trying to make sure I follow my notes. So if you see me keep on looking left and right, it's because I'm making sure I'm following my notes. So The four major fears: the fear of being wrong, the fear of losing money, the fear of missing out, the fear of leaving money. The fear of being wrong. Nobody cares. It doesn't matter if you're wrong. So what if you're wrong? I would rather be wrong and make I would rather be wrong and make money than be right and lose money. If I gave you a choice, you're always going to get the direction of the market wrong, but you're going to make $1,000 a day. Or you're always going to get the direction of the market correct and you're going to lose $1,000 of the day. I'm pretty confident everybody in here don't give up about the market direction. Yo, let me get my bread. Fear of losing money. Valid.
Hey, Marlon, can I say something? I don't know.
Go ahead. What's up?
Yeah, well, I was always taught from the first mentorship, it's better to lose money trading the right way rather than making money trading the wrong way.
Facts.
But I know you said you would rather make money the wrong way than.
No, 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 no. I didn't say make money the wrong way. You're conflicting two ideas. Making money the wrong way means you broke your system and you made money and it was a type 4 trade and you thought that you were doing good, right? That's trading the wrong way. The fear of being wrong means that you have a bias of the market and you think that the market's going to go in that direction. However, you have a bullish bias and you see a bearish setup. Because you have a bullish bias, you're not going to take the bearish setup because you have the fear of being wrong in the market direction. That doesn't mean the execution of the trade is wrong. It means the direction of your bias is wrong. So I'm asking two completely different questions. I'm not asking you, would you rather trade the wrong way and make money versus trade the right way and lose money? I'm
Oh,
asking, would you rather be wrong about the market direction and trade your system to make money versus be right about the market direction, trading your system to lose money? Two
oh,
different things.
okay, I think I understand.
hmm The fear of being wrong is, hey, what's 2 times 3? And you're like, 7? That's the fear of being wrong. Am I making sense? Yes, no, maybe.
Yeah.
Fear of losing money. That's valid, but at the end of the day, you got to get over that. You got to get over it. And the only way to get over it is to trade smaller. Okay? You have to trade smaller if you're afraid of losing money. Missing out and leaving money, that's a fallacy. You can't miss out. The market's going to be here tomorrow. There's always going to be another trade. The only way the market no longer exists, we got to be on some Walking Dead type stuff. For the US government to prohibit US citizens from trading the US stock market, we're in some wild times. You get what I'm saying? So there is nothing to miss out on. There's always another opportunity. Look at all the years of historical data, right? The market's been doing the same exact thing, the same exact thing. Nothing changes, right? So the thing is that stress and fear causes you to create these scenarios of stress and fear that don't exist. And it becomes this loop of creating scenarios that don't exist. So don't get caught in that trap. All right. So let's speed this up a little bit. The 8 rookie trading errors. I'm not gonna go over this too much. I think we're all past being a rookie. But not predefining a risk. Obviously, at this point, we should all know, hey, if I lose this trade, I know how much money I'm losing, right? So if you get in a trade and you lose and you're shocked by the loss, then you just have to restructure your trade. Hesitate and enter late. That's actually not a bad thing if it's part of your system. Okay. If it's part of your system. Exiting winners too early, never a good idea. Moving your stops, never a good idea. Predefining your risk, but not accepting it, and then having bigger losses, been there. Getting into early before you see a signal, only for the bar to not close as a signal and then go the other way and take your money. did that. Letting your winners turn into losses where it's like, okay, boom, this is your TP, price goes up. You're like, oh, I want it to go here. I want price to go all the way up here. Price is going, price is going, price is going. Comes back here. You're like, well, I'm just gonna hold. You know, I'm technically break even. Some people call it a risk-free trade, which is some of the dumbest shit I've ever heard. Sorry, it was some of the dumbest stuff I've ever heard. Like, there is no such thing as a risk-free trade. I don't know what that even means. And then something like this might happen, and then all of a sudden you're in drawdown, right? This whole risk-free thing is like, think about it like this: if this is your entry, this line is your entry, and you're right here, and you close the trade right here, you lost money. If price is up here and you close the trade right here, you made money. So if this if you're in profit and you put your stop here and you call it a risk-free trade, when you're in drawdown, is this a profit-free trade? I don't understand what it means when you're risk-free. You're risking the money that's in the market. The money that's actually moving up and down is your money. Just because it's unrealized doesn't mean it's not your money. Those unrealized gains, when the end of day hits at 4 p.m., if you're still in the market, it's gonna hit your account. So, try not to get caught up in, oh yeah, it's a risk-free trade, blah, blah, blah. This, we talked about the mindset transformation where, you have to change the way you think. So I strongly recommend you pay attention to this in the recording. 5 fundamental truths. Now, I'm gonna slow down here for a little bit. Yeah, the hour did go by fast. That's wild. The fundamental truths outlined by Mark Douglas. If you're unfamiliar with his work, make sure I'm a big advocate of his work. Watch the YouTube stuff, read his book, whatever. But his 5 fundamental truths are: anything can happen. Okay. Don't think just because you're in a strong bull move and it's one tick away from your profit that it can't reverse 100 points on you and put you in drawdown, because the market can do that and it will do that. You have to be open to anything and everything and surprised by nothing, right? And the only way to be surprised by nothing is to have an expectation. How do you have an expectation? The market does high probability things and it does low probability things. When the market is doing the low probability thing, then you have expectations of a low probability event. When the market is doing the high probability things, then you should have an expectation of the high probability event. What's a simple example? The example I use the most, you guys know I'm a breakout trader, but we also know that breakouts fail 80% of the time. So if I know breakouts fail 80% of the time, and I'm only looking for a trade that happens 20% of the time in the market environment, I know it happens rarely, but it has a high win rate. Then the thing that happens frequently, the failed breakouts, trading ranges, it has a high frequency, yes, but it has a lower win rate. Those are the trade-offs. It's the only two. Either it's breaking out or it's not. Okay. Now, once you have an expectation for that, then you determine what a successful breakout is and what a failed breakout is to you. Okay. Everyone's going to have a different definition. Now, me personally, I have a definition that was given to me, and it was given to me by Dr. Al Brooks when I took his course. So I literally just coded what he said it was, and I just went on with my day. You see what I'm saying? That's how I am. Like, I've gotten to the point where certain authorities in my trading journey, when they make a statement, I don't ask no questions. Like, I used to, and I'm not saying don't ask questions. What I'm saying is do the research yourself so that when something is brought to your attention, you can immediately validate if it's true or if it's BS. So if someone's talking price action to me, I'm going to immediately know because they're speaking a specific language. It's like if someone talks to me in Spanish, I don't know what they're talking about. If someone's talking about other methods in trading other than price action, Cool. If you make money with it, great. What always interests me is people who don't make money trading trying to convince people who make money trading that the way that they make money is wrong and that they should trade the way that they're trading. But you're not making money, bruh. I don't understand. Like people, if you look at the trading community on social media, I hate social media, by the way. If you don't know, I barely check my DMs, all my notifications are off. But if you look at social media, everyone is comparing how they trade to how other people trade, and they all don't make no money like that. There's some here and there, but for the most part, the majority of the trading community aren't making money. So it's just strange. But regardless what strategy you trade, the point I'm trying to make is no matter what strategy you trade, anything can happen. And you have to know for your individual strategy, you have to stop worrying about other people's strategies and focus on what you got going on. I tell my students all the time, start with 100 trades. Send me 100 trades. I will go through your 100 trades and we will game plan together how to make this better. And if necessary, I will customize the code of my indicator to benefit you specifically. This is a service I provided that nobody has taken up on the offer yet. And February ends in 21 days, so we got
Hey,
3 weeks to
hey,
figure it out.
Marvin.
Yep.
I got one I want you to customize for me. I talk if I can talk with you private about it. I want you to do that for me. I
Yeah,
got
yeah.
a
Just
strategy.
DM me. The thing
Uh,
is with Ninja Trader, the Ninja Script Analyzer is so powerful that you can run models for the entire instrument's life cycle. So you could do all years of Nasdaq, all years of S&P, all years of gold, all years of anything, and it crunches the numbers via tick data. Because my computer is powerful. Like I got 3 monitors. I do something over here, whatever, whatever, and I got like I don't know, like 64 gigs of RAM. I think I upgraded it to when I first got it. So I can like really do powerful things with it and it will literally show you. And then what you can do with that is you can structure it in something like Notebook LM and it'll structure um the consistencies within your wins and your losses and it'll notebook and journal those things. Or you can go online and find like a trading journal where you can literally export all your trade executions from NinjaTrader in an Excel file. You could upload it to this trading journal website, and based on the data, it'll recreate everything for you. It'll create graphs, it'll create the trades because it's going to be connected to a live data feed. It'll show your order flags, it'll show you the time of day where you've made money, lost money, what time of day is most profitable for you, what time of day is least profitable for you, your max drawdown, your average position size, your average win, your average loss, your expectation, um, your expectation of profit, your expectation of losses, your trade frequency, how many times you're trading a day, all of that, right? And I did do all of that. That's why I don't trade until 10:15 because most of my losses came before that. That doesn't mean you can't do it. You could trade at 9:30 on the dot. But for me, when I cut to 10:15, um I have to find the site again. I haven't used it in a while. But there's a bunch of them. Trader Sync, um, Edgewonk. Um, I have to look it up. I don't remember. I think Trade Sync is the one I use. Trade SYNC. Yeah, SYNC. All right. Number two, you don't need to know what happens next to make money. Okay. We don't know what's going to happen next. We have an idea. Anyone who tells you they're predicting the market or I knew it was going to go there or this is that, that's bullshit because everything in the market is probability based and you can never be 100% certain about anything because if the trade was 100% certain and if it's 100% certain it's perfectly good for the bulls, That means it's 100% uncertain and perfectly bad for the bears. And if a trade is perfectly bad for you and perfectly good for someone else, why would you take a perfectly bad trade? The only way for there to be 100% certain in anything is for there to be absolute uncertainty in the other thing, right? There's nothing that's 0% in the market, and there's nothing that's 100% in the market. And anybody that tells you otherwise is lying to you. It's the market is built on uncertainty. There needs to be someone on the other side of the trade who believes with as much conviction as you that this is going to be a profitable trade. Otherwise, who's going to take the opposite side of the asset, right? Look, go do research in, different stock crashes, uh, you know, uh, Black Monday, that's what it's called, I think. 1980s, 1942, 1800s. Look around those time periods and look at how the market paused and gapped because no one was taking the other side of the trade, and how the market crashed because there was no one willing to buy. If there's no one willing to buy, the price of the asset is just going to go down. But that's a different discussion. The point I'm trying to make is you don't need to know what's going to happen next to make money. And if you think you need to know what's going to happen next to make money, you're going to be real, real stressed because everything that happens in the market is built on uncertainty. The more uncertainty there is in the market, the more aggressive the price action is and the higher the volatility is going to be. Number three, we already know there's a random distribution between wins and losses. Number four, an edge is nothing more than a higher probability, right? You're looking for all these confluences, all this. No, all it means is I'm going to take this amount of money. I'm willing to risk this amount of money to see the outcome of this specific trade. And this specific trade has an 80% chance of being successful. How much am I willing to spend to see it play out? That's when you're trading, all you're saying to yourself is, how much money am I willing to spend to see if my edge will play out on this trade? That's it. And whether it plays out or not should not matter. Whether you make money or not should not matter. You are investing in the belief that this trade is more likely going to do one thing before it does the other thing. And if you're wrong, accept that you're wrong. If you can't allow your stop loss to get hit, that's a issue that's deeper rooted than just trading. That's a personality characteristic. You can't accept being wrong. You don't like being wrong. You want to be right. So much so that you're willing to risk your emotional health and your financial success just so you can be right. Think about it. You said, hey, I'm going to bet this amount of money that this is going to go here before it goes here. And it goes here first. Nigga, you're wrong. Just accept that you're wrong. And if you can't accept that you're wrong, then you need a mental framework beyond just trading. You need to look in the mirror and say, damn, why can't I admit that I'm wrong? Why can't I apologize to myself for being wrong? If you can't apologize to yourself, you're not going to be able to apologize to anyone else. You're funny. I don't even know what I said, to be honest. Um, Number five, every moment in the market is unique. Think about this. Do you believe, look, first off, let's start with this. Accept that statement as truth for a split second, even if you don't believe it. Accept that statement as truth. Every moment in the market is unique. Now, if you accept that statement as true, you need to make a case of whether that can be contradicted. And if every moment in the market is not unique, then that would mean every moment in the market is the same. And I think it's pretty evident that every moment in the market is not the same. Even if you have the exact same setup at the exact same time of day, at the exact same location, at the exact same price points, and you're sitting in the exact same chair with the exact same clothes, clicking on the exact same mouse button, everything's exactly the same. It's still unique because the participants in the market at that moment will never be the exact same participants in the market as that other moment happening simultaneously and concurrently. It's impossible, right? So even if the exact same thing is happening on a day-to-day basis, the participants of the market of itself makes it unique. So you have two unique things happening simultaneously, intertwined based off of human emotion, categorized by fear or greed. Yeah. I don't know if I'm gonna edit this one though to cut out the white noise. I think I'm just gonna let this one ride out to make it maintain that webinar feel. But I'll probably watch it back. I don't know. All right, Mark Douglas, Trading in the Zone. Again, highly recommended. Um, the book. Let me do this. Let me give me 1 second.
That line you dropped hit my soul, boy.
So what did I say?
You said if you won't allow your stop loss to get hit, you don't want to accept that you're wrong.
Yeah, yeah.
Like,
Um,
dang.
so some unconventional trading psychology books that helped me along my journey. If you know me, I love to read only if I'm interested. So when I went down the psychology, oh snap. When I went down the psychology rabbit hole, I went into reading a bunch of different books. And these are like sleeper books. So this one is called Trading, Sex, and Dying. It was made by a guy who wrote Poker, Sex, and Dying. If you know anything about poker and sports psychology, you know that they directly parallel to trading psychology. This was a great book, especially if you want to remove gambling from your trading. So it says heart of a gambler. So if you want to remove gambling from your trading and you want to remove distractions, so the distraction part would be the sex. So if you want to remove distraction from your life, specifically men, you know, if you struggle with a lustful spirit, what you learn is that your day-to-day real life bleeds into your trading. So you want to go into your trading day with clear, sound mind and clear conscience. I just like me personally, I trade better when my conscience is clear. So I try my best to do the right things when nobody's looking to have peace of mind for myself. And it just holds myself to a standard where I respect myself because I am who I say that I am in my trading. And this book really helped develop that. And then, the dying part is, pretty much we're all gonna die. And everything in this life is temporary. None of it has true value beyond what you can spend or what you can buy with it. But the true value and the true gift is the things that you take with you that last in eternity. And not to get too deep into my belief as a follower of Christ, but that's a whole nother topic. Another great one, Zen
Amen, brother.
Zen in the Markets. Great book. It's more of like it gives you a little bit of a Buddhist perspective, Buddhist meditation and Christian meditation, somewhat the same. Obviously not, because Buddhism doesn't have a God, and Buddhism is more about self actualization and your flame burning out when you reach nirvana. So those parts of it I don't I just kind of ignore. But the parts of it that talk about, the renewing of your mind and the steadfastness of your character, and how to calm your mind, because it says Confessions of a Samurai Trader, where it's better to be a warrior in a garden than a gardener in a war. And I know some of you guys have heard that before. That's what that book's about. And then this is another sleeper. This was the first one that jump started it for me. Trade with passion and purpose. Why are you trading? What's your purpose? Why are you passionate about it? Why do you care? Find your why, create some type of vision board, mount it on a wall. For me, I've already told you guys my why, time freedom, freedom to do what I want, be with who I want, whatever. But this one is more spiritual and philosophical, and it focuses more on psychology, just of everyday life, just beyond the trading. So this book is more about getting your everyday life in order so that when you're trading, you're not you can compartmentalize. So say you have something going on in life, but hey man, you need this money. You got to be able to take that, put that back here, take the trading brain, put that here, lock in, then put that back here and then deal with that. So if you're interested in any of those books, good reads, man. Really good reads.
Are those books available on Audible?
I don't know. I would assume so.
Because
Um,
I
I'd
think you
rather
could find
listen
it.
to.
I
I
think
don't
you
read
could.
well.
I
mm.
was gonna say you could find some of those on audiobook too. I think
Audio, yeah,
Mark,
that's one.
yeah, Mark
And I
Douglas.
mean, honestly, at this point, if you can find a PDF, um, I'm not advocating for it, but if you could find a PDF, there are AI models that will convert it to Audible. So it's like there are some books that don't have Audible, or there might be something that, I'm making a PDF or something, and I don't feel like reading it. It's like maybe it's something psychology based or whatever. I can just make it you know annotate it for me verbally or whatever, and then you can use like now it's to the point where you can use AI models to actually read it to you, or I can use an AI model of myself and replicate my voice to read the book to myself. There's a bunch of ways you can do it. So the mechanical stage exercise, very simple. This is Mark Douglas vibes. Define your sample size. So we're going to start with maybe 20 trades. Scale to your comfort. Execute without thinking. Keep a journal. For me, that execute without thinking part comes from coding, right? Like before I used to have to, okay, look at the bare naked charts, wait for the signal, hope that the IBS is lined up, you know what I'm saying? Then gauge where the midpoint is, maybe use a drawing Fibonacci on MT4 or whatever, and you know how cumbersome that is. Then try and get in, maybe there's some slippage. Then I got to calculate my position size based on the stop of the pattern, but you don't know the stop of the pattern until the pattern bar closes. So there's a lot of moving parts. So what I did was I just minimized all those moving parts. Hey, all of that I just mentioned, my bot does it for me automatically now. All I got to do is decide whether I want to take the trade or not, and then just watch and just make sure it's executing the way that I would execute. And so far, so good. Last week was my biggest week of the year so far. And last week was fully automated trading. I didn't take any manual trades last week, all automated. Now,
So,
most
so when we
important,
gonna get that bot?
which bot?
The one that you're using to automatically take
Oh,
the
nah,
trade.
never.
Yeah. Oh, oh, that's not.
Nah. That's well, one, that's on the 5 minute chart, and two, that's like my personal trading system that I trade with my cousin, so it's like not even fully mine. But as
Right.
far as a 15-minute, um, I put in the Telegram group if you wanted the wait, which mentorship were you in?
The last one you did.
Were you in the other one on the 15-minute chart?
No, I was just in the one you did for when you coded Cornell stuff. That's
Oh, oh, so okay, so with Cornell stuff, hold on. All right, so back to it, the loss recovery protocol. So, like we said, the first thing you want to do is acknowledge your loss. Like, look, I took this loss. Is this a good loss or a bad loss? Okay. The process and the outcome doesn't matter. Whether you win or lose doesn't matter. You need to ask yourself, was it a good win or a bad win? Was it a good loss or a bad loss? You should be as upset with a good loss as you are with a bad win, meaning they mean the same thing. The only difference is a good loss is part of your system and a bad win is not part of your system. And if you take a lot of those bad wins, eventually one of those bad losses are going to come. And the bad losses are the ones that always have you like, yo, I was $200 away from payout. I took this buy up here because I seen it was breaking out. It started pulling back. I knew I should have got out. It was pulling back. I knew I should have got out. It was pulling back some more. I definitely knew I should have got out then, but I didn't. And now my account's blown. And now everything that I just went through, I have to go all the way back through it because I wasn't patient enough to simply wait for the correct trade. What do I do after a trade? I usually try to do a reset. I wait a minimum of 1 bar on whatever time frame I'm trading on. So if I'm trading on the 15 minute, I'll wait 15 minutes. If I'm trading on the 5 minute, I'll wait 5 minutes. I will literally walk away from the screen. For me, it's easy because I'm at the school job, so I have to monitor students at all times as much as possible. So, when I throw a trade on the screen, I could just get up, walk around the classroom, start teaching, helping out, whatever, whatever. My planning periods are pretty long. Some is 90 minutes, some is 85 minutes, and I get one of those a day. So I have a lot of time to, trade and stuff like that. But for me, the physical reset is in doing something that I love. So when I take a trade and I get up and I start helping students, by the time I realize, oh snap, I'm in a trade, I've already helped the students and I go and then the trade already played out. So that's what I would do in the beginning of my trading career when I was too afraid to watch the charts. Obviously, journal, which is what your 100 trades are for, and then recommit. The recommitment is the important part. Don't change your strategy or what you're doing because of one loss, right? If you're doing something and you have 8 wins and 1 loss, don't switch up everything because of that 1 loss. Obviously, those 8 wins were doing something correct, right? Look at the 8 wins, which is why journaling is important. I'll give you guys a little bit of an update. Within the past week, my trading system has completely evolved. The way I trade is the same, but how I trade it and what I trade is slightly different. And I hope that is what's happening for you guys as well, where you see it on the 15-minute chart and you're like, you know what? These type of setups work better for me. These are my A plus. These type of setups, when there's prominent tails above and below, and it looks like trading range price action, and the breakout bar doesn't go anywhere, and the follow through bar doesn't go anywhere, you know what? Those setups, man, they a ass. I ain't gonna take them setups. That's what I do. I start to categorize the setups, and that's why the Excel sheet is so important. Because what's gonna happen is what's going to make you profitable is not building on those 100 trades. The purpose of the 100 trades is for me to remove stuff. Let that resonate. The purpose of the 100 trades is for me to remove from your trading the things that are limiting your profitability. Now, Can you do that on your own? Absolutely. Absolutely. Or you can have someone who's worked with 50 plus traders who he himself is consistently profitable and has shown you proof, can oversee your trades, identify your mistakes for you, remove those things, and if you trust his opinion and confidence, you can move forward and refine your trading approach. Those are your two options. Do it on your own, option one. Option two, get it to me, let me overview it, remove what doesn't work, give you ideas on strategies on what does work based off of my 7 years of experience, which comes with hundreds of books of reading, hundreds of courses, creating courses and content of my own. Like, I'm not just some random guy. Like, I'm humble enough to understand that this is a gift from God, but I'm also aware enough to understand that I'm just really good at it. So, you have to move that way. If you don't believe you're a good trader, then you're probably not going to trade like a good trader. They say, oh, this person's delusional. Well, shit, they're making money. Be delusional. Oh, your stop loss is all the way over there. Yeah, but I'm up 2,000. How much you made? Why you worried about me? Why you worried about my stop loss? Why do you even care if I have a stop loss? Why does my trading affect anything you got going on? Should it even matter? Why does what this person got going on or that person got going on? You worried about the wrong things. Okay. You got to focus on you, your process, and recommitment is the word. You need to recommit. Now, how can you recommit if you have no system to commit to? How can you recommit if you have no system to recommit to? That's why we need those trades. We need some type of defined system. And you might think you have a defined system, and you might just, and you most likely do. But just in case, maybe, and even so, wouldn't you like to improve? If you like how your trading is and you're good where you're at, that's good. But I tell you now, even me, I'm trying to improve every day. I'm still in courses. I'm still reading. I'm still coding. I'm still doing all these things while working 9 to 5. While, you know what I'm saying? Like, I get it. I'm young to some people. I'm 37. You see what I'm saying? But there's a student from my middle school in here right now, 13, 14 years old, okay? Who is interested in this stuff and willing to build from now. There's, like you said, 60. There's all spectrums of age, but the goal is the same, is it not? So my point that I'm trying to emphasize is stop focusing on anyone else's journey. Give me a second. Um, how do you get 100 trades in 3 weeks? What do you mean, how do you get 100 trades in 3 weeks? I don't know what you mean by that. What do you mean by that?
No, I was meaning that 3 weeks left. Does it matter like what time frame the trade is happening, or they all have to be on the 100 trades,
I don't know. You tell me, what time frame do you trade?
the 15?
All right, then it has to be on the 15 minute. There's people on here who trade on the 1 minute chart, so their trades are going to be on the 1 minute chart. There's people on here who trade on the 5 minute chart, so theirs is going to be on the 5 minute chart. All you have to do is just find 100 trades on the 15-minute chart. that you would take. It doesn't necessarily have to be real time. You can do real time to add to it, but this is a back test. You're looking at historical data. You're looking at data from back in time. You see what I'm saying? So it's just a look, me and Combo have knocked out 100 trades in like 30 minutes to an hour. Combo is the king of that. If I give Combo 100 trades right now, that nigga's getting it back to me in 20 minutes or less.
Oh yeah, you can do 100 trades in a day, but let me say this, Marlon, because
Mhm.
I look at the 15 minute like for direction sometime, but I don't take my trade on the 15 minute. I take them off pretty much the 5 minute or the 1 minute.
Mm.
So when you say it got to be on the 15 minute, I use the 15
No,
minute.
no, no. I didn't say it has to be on a 15 minute. I said for him, since he trades the 15 minute, that he should send his trades on the 15 minute. However, there are some people who trade different time frames, like the 1 minute or 5 minute, maybe even the 60 minute. I want the trades on the time frame that you actually trade on.
Take the trade on. Okay,
Mm-hmm. Mm-hmm.
I got you.
So if it's a
I got
system that requires higher time frame confluence, then we're gonna have to address that, right?
you.
If it's a entry system that doesn't require higher time frame confluence, then great, we could just streamline and get straight to it. But the thing with higher time frame confluence is every trade that you take, you have to verify that the time frame is in that environment. And since most people are discretionary traders when they look at time frame confluences, it makes it more difficult to have a systematic approach where, say, if this and happens, you get a green light, I'm in the environment, now I can take the trade. You know, for me, it's a little bit different because with me on the 15 minute, what tells me that I have higher time frame confluence is the 3 bar breakout, and it actually paints an actual color. And when it paints the actual color on the 15 minute, then I go to the 5 minute. You see what I'm saying? And then on the 5 minute, since I know I'm in that environment of a 15-minute bullish breakout,
Mhm.
then I look for entries on the 5 minute that also meet a systematic criteria and actually paints a signal as well. So for me, my system is literally created for confluences, but I don't have to find the confluence. So if you're gonna have a confluent system, you're gonna have to have a way that whatever it is on whatever time frame you're using always produces the same result. The reason that's important is because if you don't have something that's going to create the same environment to trade, then when you try and calibrate expectations based off of probability, there's always going to be a variance. So your goal as a trader is to remove as much variance as possible and streamline things as much as possible. So I also have 5 minute systems that doesn't need any other time frame other than just the 5 minute.
Yeah.
So, you know, the thing about systems and trading is people think that discretionary trading is better than systematic trading because systematic trading you have to wait for XYZ. But the thing is that I'm trading like 8 systems, and all of those 8 systems appear maybe 10, 15% of the time. But when they appear, they have like a 90%, 80% win rate. So I'm okay missing a bunch of trades because maybe one might show up in that system, or one might show up in that system, or one might show up in that system or that system, right? The move is the same, but there's ways to trade within the same move. I'm showing you guys the easiest way. If you took the 15-minute mentorship, we all know the 15 minutes the easiest way. If you took the art of trading mentorship, then you have on the 1 minute chart a defined system where you have to wait for a pullback, right? You have to
On the
wait for a
5 minute,
pullback. No, 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 no. On the 1 minute.
on the 1 minute, you got to wait for a pullback.
Yeah, on the 1 minute. I mean, even if you're trading major trend reversals on the 5 minute, everything I trade has a pullback.
Yeah.
So if you're on the 1 minute and you see the 60 minute, the hour chart, let's say is looking for buys at the bottom of phase two or whatever, or the cycle two or cycle one, whatever. And you go to the 5 minute and you draw your price points, your high price, your low price, your middle price. And then you go to the 1 minute, and then you start taking the outside bar fades, right?
Hmm.
The question would be now, how do you systematically categorize the three price points? And how do you systematically categorize the direction of the 60-minute chart? For me personally, for me, Monty, right? I couldn't create something. I couldn't create something that was always the same. So I said, I'm no longer going to trade the 60-minute like this. I am going to go down to the 15-minute. Now I have a defined system, which ultimately allowed me to move back to the 60-minute with the same exact system with different probabilities. So my 15-minute system has a 70% chance of a pullback. And if it pulls back, it has an 80% chance of being profitable. My hourly system has a 10% chance of a pullback, but it has a 90% probability, right? And on the 5 minute, those systems somewhat decline. So I somewhat altered them for what makes me comfortable as a trader. Then there was a time where I was going with breakout fades. I lost too much money. I scrapped the idea. It's all trial and error. I've tried hundreds and hundreds of systems, and I've just chosen the ones that work for me. And I coded it so that whether I'm at the school job or whatever, I could just like I don't even have to hit buy or sell. I literally just click enable auto strategy, and then I walk around the classroom. And if you ask any of my students, I got one in here. They'll see me walking around the classroom just deep in thought, helping out, teaching, walking around. Like, Mr. Vincent, why are you walking around so much? Don't worry about it. I'm walking around because I'm making sure y'all doing what y'all doing. Whole time, I got a trade going on, and I don't want to worry about it because if I worry about it, I'm gonna forget I'm at the school job and I'm gonna just be sitting at my desk all day. So I needed to figure out a way, how can I trade at work and make money and not interfere with my job? I created my own solution. I didn't wait on nobody, and I will never wait on nobody, right? So, you know, there's resources out there for all of us, and most of them are free.
Yeah,
It's just, the matter of, taking the time to actually do it. And again, I am 100% understandable that, I grew up on computers. We're all at different stages of life and things are going to be different. There's certain things that I would rather outsource. Like, I would rather pay someone to cut my grass because of the time that it saves. I can do it, but I just don't want to. I would rather just pay for it. Right. So I get it. Like,
that's what I do. I'd rather just pay you than you do it for me.
yeah, but we can talk, but what I'm saying is that don't get so caught up in being non self efficient. I
I
want you
got
guys to be self efficient. Even if you just throw something in chat GBT, like, hold on, is Marcus in here? Nah, he left.
you. Hey, I'm still learning how to use Chat
Yeah.
GTP. Yeah,
So
wait a minute.
Marcus coded uh the the system for Thinkorswim. And he was trying to use it, whatever. And he sent it to me. He was like, yo, this is that. I spent the night working on it. I sent it back to him free of charge. Why? Because he showed me the initiative. He showed me, okay, boom. He went into the code and he tried to actually build something. Now, I'm not saying, oh, okay, send me a code and then I'm going to do it free of charge. No, it's a system that was already built. And he was just trying to take a built system from NinjaTrader into Thinkorswim. And I was going to do it anyway and distribute it for free. So now he's test driving it for me. And then maybe that's something I'll be distributing in the future if all the bugs are good, but I don't know because I don't code in that language. But the point I'm trying to make is that be a self-starter. Don't wait for prompting.
I
Get it
got
done on your own. Like, what is it that you're trying to achieve here in life? This is like a general question for everyone. Like, what are we trying to achieve here in this game? What is the purpose? You see what I'm saying? And Do you really want it the way you desire? Because there's a lot of people who say they want things or they want to improve on this and they want to do that, and they're living the same life that they've been living since COVID. I remember there was this lady that was teaching. She was like, "Oh, I want to get into educational leadership. I want to get my this, is that." But um, however old she was, 50, 60, so she was an older woman. She was like, "Yeah, I'm too old and this is that." And I was like, "Look, hear me out. 5 years from now, it's still going to be 5 years from now. So whether you do it or you don't do it, 5 years from now, it's still going to be 5 years from now. So don't have the regret. At least take one class or this, that, blah, blah, blah." It is 2026. This woman has not taken one class, and all she does is complain to me about her job. And I don't know a nice way to say that I just don't care. You know what I'm saying? Like I don't want to hurt nobody's feelings, but I don't care. You see what I'm saying?
Because
Like
that's not your burden to bear. That's her burden.
right, right. And I don't want to sound like an asshole because I'm very empathetic, but there's just certain things that's like, yo, what do you like? I can't I can't click the mouse button for you. I can't learn the material for you. I can't study for you. And these are things I tell my students all the time. It's like these grades and these grade books is just a placebo. It doesn't really matter. What matters is what's happening here. Am I expanding your mind? Did you learn something? Did I make you think? That's what's important. The whole purpose of this entire webinar is simply this. Am I making you think in a way that you weren't thinking before you got on this Zoom call? And if you are, then I did my job, regardless of the outcome, because I've given you the perspective of someone with an experience. I've showed you guys about 4 or 5 books. We've gone in depth. We've gone double the time that was expected, and we're still going. And all of this is free resources for anyone who showed up. All I could do is spread the gospel. Who it reaches and who receives it and who accepts it is not my burden to bear. And I refuse to allow myself to do that to myself anymore. So I say all that to say that I hope that, with the access that you guys have to me and with the journey and the mentorship that we've done, that you see the quality of it far exceeds what's normal, far exceeds what most people who are doing the same thing got going on. And I never even really wanted to do this. I kind of just stumbled into it and was like, oh, damn, I'm really helping people. Like, people are really making money now because of me. Like, people are showing me payouts and their lives are changing. Damn, I'm helping marriages. Like, she was gonna leave you and you started making money. Oh shit! All right, nigga, go get your old lady back. You know what I'm saying? Go get your kids back. You know, that's why I still do it. But at the end of the day, I can't make the money for you. And what, even though I kind of took long to digress, as I get back into the purpose of that rant was self accountability. You need some type of self accountability. You need to be able to look at yourself in the mirror and say, I fucked up and I need to get better. This was my fault. The market didn't do it to me. This was my lack of preparation. This was my indecision. This was my fear. This was my greed. My greed. No one else but me. Okay. I'm focused on the money. I'm not focused on the process. That's me. I don't believe in myself. That's a you problem. I can't believe in you for you. I can believe in you, not for you. So if you don't think you can do it, I tell my students, hey, if you don't think you can do it, you can't. And I'm not going to convince you that you can. But if you believe you can do it, I'll always support you. But if you come here and you tell me you can't do it, you can't do it. Just don't waste our time. Go put your head down in the back of the classroom, grab a laptop, put your headphones on. I'll put in the F. I'll let your mama know, and then cool. But just don't distract the environment we got going on, right? You need to have that awareness. And most importantly, for self awareness, you need to ask yourself, What are my what are my error patterns? Like what am I doing that's repeatedly causing me to lose money? And how can I not do those things? That's what the 100 trades is for. And then also, this one I haven't touched on yet. Who are you as a trader, right? What is your identity? I'll tell you. I'll give you an example. When I'm trading and I do something I shouldn't do, which is rare at this point, but let's just say, I don't know, what's something stupid I used to do? Move my stop loss. That's the easy one, right? When I do stupid stuff, I would literally curse myself out up here. I'm like, dog, what are you doing, dog? You're too good for this. You're consistently profitable. You are a great trader. You're phenomenal. You don't make mistakes like this anymore. Cut the trade. Cut the trade. Marlon, cut the damn trade, bro. What are you doing? That's how I talk to myself up here. It's like, dog, you're too good for this, dog. Why are you making these stupid mistakes? Why are you think about basketball? Why do you have these dumb turnovers? My handle is too good for this, right? I am too good to be making this mistake that I have made for the past 6 years. Do you believe that? Ask yourself, do you believe you're good enough to not make the same mistakes? Because if you believe it, why are you still doing it? You ever thought about that? Why are you still making the same mistakes? If you told yourself that you're not going to make the mistakes, what is it? What is the defining factor that is causing you to remain in the same cycle? Maybe you like the cycle. Maybe the grind is fun for you. Not for me. I want to get my money. I want to bounce, go on with my day, get on with my life. Of course. Look, anybody that knows me knows I'm a lookout. It don't matter. All right, journey expectations, common scenarios. So we've identified, let's quickly recap. We've identified changing our mindset to be a mindset of what does money think of you? It thinks nothing. All right, cool. Well, if money thinks nothing of me, I think nothing of money other than just an exchange. No different than exchanging a pencil for a calculator, a grape for some wheat, some grass for some unleavened bread. I don't know. It's all the same thing, right? Then there's the profit gap. The results you want, where you are, and what's going on in here. And accepting that what's going on in here, nobody's going to see, right? Nobody knew I was making money trading until I was making money trading, besides me, even though I wasn't making money trading. Call me delusional, but guess what? I'm making money trading. Are you? Isn't that the goal? Isn't that where you want to be? So if I need to be a little bit delusional to reach my goal, call me Mr. Delulu. It don't matter. Until I start seeing the success that I want, I'm going to continue to build towards the success that I want. But it starts in here, and nobody's going to see it except for you. And you're going to have to be okay with the people around you calling you crazy, your loved ones asking you what's taking so long, people thinking you've lost your mind and you're insane. And that's why I'm low key. If you know, they call me low key Monty. I don't be outside. I don't drink. I don't party. I work, home, gym, sleep. I mind my business. I stay out the way. I ain't got nothing going on besides what I got going on in my personal life in the safety of my home. Look, you see my room? I like my room. I got a new bed for Christmas. Man, comfy, right? Stay out the way. Let this grow and develop on its own. Don't allow outside influences to tell you who you are as a trader. Don't allow those expectations to dictate where you believe your journey should be as a trader. The average is 5 years. So that means some people might take 10 years. Some people might take 1 year. How long are you willing to put in skin in the game until you see the result that you want? Then you have to transition your mind to probabilistic thinking. How much am I willing to risk to see if my edge will play out? Your wins and losses is a random distribution. Again, random distribution means you don't know how many wins you're going to have, how many losses you're going to have. You don't know the order it's going to happen. All you know is that over 100 trades, my edge is going to play out like this, and I'm going to make this amount of money. And I am focused on that process, nothing more, nothing less. Then we talked about why it's so difficult because we're at war. Our brain is at war. Your prefrontal cortex, right? The rational brain, the analytical brain, that looks at your amygdala and it's like, yo, my guy, why are you tweaking so hard? Chill out. We're not gonna die. It's literally colors on a screen. What's the skill we need here? Clicking a mouse? That's how we get in trades, ain't it? Buy, close, sell, close. Either you're in money or you're out money when you hit close. But really, all you're doing is just clicking a mouse. That's the only physical skill you need is to be able to click a mouse. So now that we got that out of the way, what you worried about? You worried about how you gonna click the mouse? Okay. So what? You got to get that amygdala, calm it down, and create actionable steps on what to do when that conflict happens. Like I said, for me lately, my conflict is euphoria. I'm so excited. I want to take the trade. I want to make money. I want to make money. And I'm like, you know what? I'm done for the day because I'm not supposed to be this happy. Now, if you want to trade in that state, go ahead and trade in that state. I'm just telling you what I did to be successful and consistently profitable based on my beliefs of who I am as a man. You have to identify who you are. I can't create that identity for you, but that's where it starts. Create your identity, who you are as a trader, and stick to it. Even if it's not true, stick to what you want it to be. Man, I let my winners run and you keep on cutting your winners. Eventually, my dog, I let my winners run. Why am I not letting my winners run? Then you start letting it run. How much frustration, how much time, how much money, how much patience are you going to continue to invest until you do something different? If you know me, you know I love Einstein. Definition of insanity. Doing the same thing over and over, expecting a different outcome. Where are you? Are you allowing your emotions to take over, expecting a different result? Or are you taking that prefrontal cortex and having it shut down those cortisol spikes and the what's the happy emotion? Dopamine, right? You got to shut all that down and just stay even keel. Calm your mind. Look, one thing I do with my students is I tell them to visualize. And I'll literally be standing in the front of the classroom and I just close my eyes. I don't care what they got going on. They're not going to do nothing crazy, I hope. And then we start visualizing. So, you know, take a deep breath. Sometimes you just got to slow everything down. Take everything one step at a time. Why am I trading? Why do I want to be successful? Close your eyes, think about it. Breathe with me. Why are you here? Why did you join this webinar? What is the purpose? What are you trying to accomplish? What is your goal? Are you achieving your goal? How can I help you achieve that goal? How can you find this peace that you feel and maintain it while trading in the market? Let it resonate. and truly, truly make a decision in this moment to make a change. Because for the most part, more than likely what you're doing may not be working for you. And if it's not working for you, maybe try something that will. Now, I'm not saying find a whole different system. No, no, no. I'm talking about right in here. Then we talked about the four fears that sabotage traders, some rookie mistakes to avoid, transforming our mind when you get in a trade. Your thought process isn't, I hope this hits TP. Where's my account at? How much drawdown I got? No, transform your mind. This trade is forming. There's an 80% chance that this will be a profitable trade. How much money am I willing to spend to see if that's true? You calculate it, you get in the trade. And to mention what we talked about, what Todd had brought back up, is that if you're moving your stop loss, then you haven't accepted to yourself that you can be wrong. My students sometimes correct me when I'm teaching math. And you know what I say to them? I say, thank you. You know what else I do? I go to my little filing cabinet and I give them a reward, like an airhead or a dum dum or something like that. Right? Because the fact that they were so aware that they recognized that I, the instructor, made a mistake, which happens, and was willing to correct me, so confident, whether they be right or wrong, deserves to be celebrated. These are 12 and 13-year olds in a classroom of peers, going through puberty, going through whatever, boys liking this girl, like all this drama. They tell me everything. I wish they didn't. They tell me everything. I know everything that's going on. We got, we got, I ain't gonna get into it, but a lot of drama. And the last thing they want to do is be embarrassed in front of a group of their peers, in front of their favorite teacher, right? So I reward them. And you know that positive reinforcement, those students always do the best. Why did I say all of that? Reward yourself for calling yourself out. Reward yourself for changing your mind. Reward yourself for being disciplined. It could be anything. I don't know how you reward yourself. Me, sometimes on the weekends, it might be a blunt. I don't know. It might be a meal. I don't know. Whatever it is, however you reward yourself, something that you don't normally do that you feel can give you that reassurance. There was a point in time where if I didn't follow my trading rules, I was not allowed to trade the next day. So the reward for my trading rule, for following my trading rules and being disciplined, my reward was being able to trade. You want to trade again tomorrow, Marlon? You better follow them damn rules, boy. You want you oh damn. Then you know what? The next day comes and you know what my punishment is? I have to watch the market on simulation mode and not trade. And for some reason, I don't know if God was just testing me and really wanted me to just be patient, but it's always the days that you don't trade that the market goes stupid in your exact setup, and it would have been like the perfect trade. Has that ever happened? Like, yo, I'm not trading today. You look at the market and it was literally the perfect setup, and you're like, what the? Every time. And I got so fed up with that I just stopped doing stupid stuff. The quickest way to make money in this game is to stop doing stupid stuff. Then we talked about the five fundamental truths outlined by Mark Douglas. And then we talked about some books that we could read. Oops. Some psychology books, Trade with Passion and Purpose, one of my favorites. Zen in the Markets, which is more of a Buddhist teaching practice, meditation. Trading, Sex, and Dying, made by the guy who wrote Poker, Sex, and Dying. It talks about sports psychology, market psychology, dealing with indwelling sins, repeating sins, and essentially dying to yourself and understanding that nothing in this world goes with you when you die. And another one of my favorites, When Super Traders Meet Kryptonite, which is a bunch of stories about traders who did a bunch of stupid stuff. And I recommend if you read this book, your approach should be I'm not going to do any of this stupid stuff. So that's what this is. But this is the Bible on the stuff not to do. So don't do the stupid stuff. All right, then we talked about the mechanical trade, specifically, you know what I'm saying, keeping a journal is the big key thing here. Big thing here for loss recovery is to recommit to the process. And in order to recommit to the process, you need a process that you're already committed to. And the process that you're committed to is your identity as a trader. I recommit to being disciplined. I recommit to being locked in. I recommit to stop doing the dumb things, right? You know, maybe you haven't traded for 2 years, a year, whatever, and you're trying to get back into trading. Okay, who are you now? Because that person's over with, right? That person's over with. That time has passed. We're here now. So there's no reason to feel bad about it. Whatever circumstances and situations in life that got you to this moment happened how it happened, but you're here now. So whatever, okay? You have to be able to forgive yourself and you have to be able to believe in yourself. You have to talk positive life and affirmation. Even if the words aren't verbally coming out, you must speak life to yourself. Life and death is in the power of the tongue. And even though I'm speaking metaphorically, speak to yourself in a loving manner. Like, okay, damn, all right, I fell off. Time for me to get back right. I recommit to myself in this moment. But here's the thing, nobody's going to keep you accountable except for yourself. So you're going to have to look at yourself and look, whoever I'm talking to you right now, you're going to have to look yourself in the mirror and make a decision whether or not you truly want to recommit. And if you truly want to recommit, then just run to the finish line. Just run. It's a marathon. It's not a sprint. Take it slow. But if you're not going to recommit, don't waste your time. There's more productive things you can do with your life if you're not truly going to commit. So commit to it. Then we talked about self accountability. You have to be self accountable. You have to be self accountable. There's no way around it. All right. And then we got back here. These I want you guys to read on your own when you get the recording. These are some scenarios that you're going to experience as a trader. You know what I'm saying? Like, and more importantly, the thing that I do kind of want to briefly talk about is typical timeline, realistic timeline. If you're consistently profitable within 6 to 24 months, you're on the small percentage of people. You're on the 1% of the 1%. Okay. Most people take 5 years or more. Most people take 3 years to get break even. So if you're on a journey and you're on year 5, there's nothing wrong with that. If you're on year 6 or 7, there's nothing wrong with that. Now, once you get to year 8, 9, 10, and you're still doing the same stuff, maybe we should have a conversation and you figuring out something else to do. Or you're just so committed that, you know, for example, my mentor, Dr. Al Brooks, it took him 10 years to be profitable. You know, obviously in the 80s, it was a little bit different, but it took him 10 years. If he gave up and he never created his course and he never mentored me, I would have never met Ali. And if I never met Ali, I wouldn't have gotten to coding. And if I never met James, I wouldn't have known about certain different things. And all that came from this one old ass white guy who was an eye surgeon set for life, married with kids, and said, I always wanted to be on Wall Street. I don't care that I spent 10 years and I've been doing these old practices and I have these published stuff for, eye research and all of that. He didn't care about none of that. And then he went into trading. What if he never did that? I don't know. I don't know. It just played out that way. And I'm grateful for it. And because of that, now you guys are here. And I'm a product of that. What if I never met Cornell? Then I probably would have never got into trading. There's so many things we can look at. There's so many ways things can happen. But we're here now. And you need a new expectation for right now. And if I can encourage you to do anything right now, is to forget about everything that happened before. Forget about the losses. Forget about the blown accounts. Forget about the payouts if you gotten any. Forget about everything. Look at where you are right now. Make a decision today, right now, and follow that script. Now, if you're profitable, you already got the blueprint. Great. If you're not, start somewhere small. Trade $2 a point. If you trade $2 a point, it will remove a lot of the stress and you can actually learn how to trade. But a lot of people are trading $20 a point, trying to catch 5 points, 10 points, or they're taking a swing trade with $1,000 risk and they're only trying to make $200. It's not sustainable. And you're going to hit your head long enough, but eventually, hopefully, we wisen up. Now, everything that I've spoken on in this past 2.5 hours, damn, I've been talking for 2.5 hours. In these past 2.5 hours, all led us up to this one moment right here. Okay. Everything that we've been talking about has led us to this slide right here. This is the last slide. This is the most important. Well, I wouldn't say most important. I think the most important is where we start, how we view money, and then, this will follow suit. Now, a defined trading system solves most psychology. Everything that I've talked about on the psychological end, I don't even think about. I don't even concern myself about. This took me like 2 weeks to make because I really had to put myself back to when I was losing money and when I was learning how to trade and where my psychology was at. Like it was really hard for me because it was like, damn, like I'd have to look at other people to see what they got going on because I'm so far removed from this dumb stuff. Like it doesn't even cross my mind. It's like I see some things. I'm like, dog, why would you do that? And then I'd be like, wait, find grace. You did the same thing a million times worse. So stop casting that stone, homie. And then you take your step back and then you're like, okay, how can I help? And most psychological problems are execution based. Where to get in at, where to take profit, and where to exit at. A systematic approach inherently corrects almost all these issues. If you trade any of my system, all of these parameters are automatically defined for you and it pops up on the screen with one click of a button. Patience and discipline are performance skills. This is the key. It can be developed. Okay. Even something like singing can be developed. Now, you may not have the most natural vibrato to create a strong, pronounced sound, but you can at least hum a soothing tone, right? Working out, sports, there is a natural aspect to it. However, they're all performative because they can be developed. If you shoot a basketball and you're not good at it, it's a performance skill. It can be developed. Some people have a higher aptitude to different things based on however God made them. So what does that mean? Let's say I'm Shaquille O'Neal. My game is go to the post. Oh, this nigga too little. What's he doing down here? Wham! Bang on that nigga, right? You're Stephen Curry. Are you gonna go to the post and try and back down a big? Or are you gonna be at the 3 point line waiting for the double high screen from Draymond and Clay for the other screen on the other side from the other two people? So you're four people's is screening one person, and this nigga's so wide open that it looks like nobody's guarding him, and he shoots the three. What is your game? What are you good at? What system in trading makes you the most money? What is your bread and butter? Everybody here knows what my bread and butter is. Everybody knows my go-to trade. I wait for that 15-minute pullback every time. And if it's a strong move and it looks good on the 5 minute, best believe I'm in there. And then while I'm waiting for my bread and butter, where I probably risk like four, five, 600, seven, sometimes 1,000. I risk big on those. I go on the 5 minute and I trade one or two MNQ. And you know what happened last week? I didn't take one 15-minute trade. And I had the biggest week I've had in this whole year because I'm taking the little trades that are setting up along the way. But then when my big trade comes, I take my big trades. That's my A plus setup. Only take A plus setups, right? So even though I'm not reading directly off the checklist, I'm still, going through the things on the checklist, right? So to be more organized, let's start from the beginning. Rules eliminate hesitation and revenge trading. If you know where your entry line is, you get in there. If the trade doesn't play out, you can't revenge trade because our system, if you trade it properly, takes 45 minutes to set up. And then after it takes 45 minutes to set up, you got to wait for the pullback. So a setup might take an hour. Then you got to get into the trade and you might be in drawdown. So if you're revenge trading on the 15 minute, you are definitely not following the system because there's no way to revenge trade because not enough trades presents itself. So if you're over trading, you're automatically trading outside of the system, right? There's no more guessing. You're just executing. You have your system and you execute your system. It's like, this is my system. These are the trades that I take, X, Y, Z. I manage it like this, right? Some of you guys who have seen this, right? Here's one of my trading systems, my simplified approach. I have different sections. This is what I do. When this happens, I do this. When that happens, I do that. Everything is binary, yes or no. And then it loops. So, for example, I can't find it to bring it up, but I'll give you guys an example of my binary system. Okay. So, when a bar closes, either it's a breakout bar or a trading range bar. Then I look at the environment. Either it's a trending environment or a trading range environment. If it's a trending environment and there's a breakout, if the breakout is strong, I trade with the breakout. If the breakout is weak, I wait. If it's a trading range, if the trading range is directional, I buy at the bottom of the trading range. I sell at the top of a trading range. If the trading range is too tight, I take no trades. That's it. That's how I trade. That's my whole trading system right there. Consistency comes from repeatable process. So you need something repeatable, right? You need some type of mantra. How you trade, what rules you have in place. You need to be able to recall those things like that while you're trading, right? Damn, why am I buying down here? This is the top of a trading range. It looks like the bottom, but the location of the overall context is actually the top. I'm buying at the high of the swing point. Yo, let me chill out, bro. What are you doing? Relax. Right? Now, I think I don't remember who mentioned it, but someone mentioned, the screenshots, grading your trades, tracking your process, and trying to improve one thing per day. You always want to be even keel. You don't want your emotional state to be unstable. You want it to be more stable. Whether you win, whether you lose, you react the same. You know, some of my students know they never know if I make money or losing money unless I tell them, because some of them know I trade whatever, and they'll ask me like, "Yo, I made money today." Like, Mr. Vincent, you look happy. Nigga, I'm always happy. You made money in the market? Nah, I actually lost today. Why are you so happy? Shit, because I got to trade. I had the opportunity. A lot of people don't got this opportunity. There's a lot of people at my job that are stressed. Even recently, they took away diabetes medication from healthcare in Broward County Public Schools, and now there's this whole petition because people were abusing Ozempic. Is it just to remove that? Absolutely not. But that's just something I don't stress about because I'm not diabetic. My dad is, but I'm not. So just because it doesn't affect me doesn't mean I shouldn't be an advocate. I disagree. All right. So I put myself in a position where my life isn't defined by my salary. And I want that for you guys. It's very freeing. Like, obviously, all my bills are not paid. I don't have, I still pay rent. I still have student loans, but I'm not worried. Like, I'm not worried. You know what I'm saying? Like, I'm not worried. I'm not worried. Anytime I've ever needed anything, God has provided. So why am I worried now when I have more than I've ever had before? It don't make no sense to me, right? So the one key takeaway is, what is our edge? Our edge is patience. Our edge is patience. Allow the market to allow the market. Give me 1 second. Sorry about that. I forgot what I was gonna say. But number thing is patience. Allow the market to come back to your entry. Okay, that's our goal here. Whatever system you trade, if it's a pullback system, more than likely, allow for price. And I'm not saying don't put your entry a tick before or like a couple. No, no, no. Put it on the line. Yeah, yeah, you know what I'm talking about. You don't want to do it, right? No, no, no. Put it on the blue line, the entry line. Let it get there and break a tick before. I know what y'all be doing. I know y'all try and get in early sometimes. I know. No, no, no. I did it. I did it. I don't do it no
That'd be
more.
me. I ain't gonna lie. I confess.
I don't do it no more. But hey, there's them ones where it's like, hey man, it don't take you, it don't put you in. Then they'll give you a little something, you try and get in there, like, hey, hi, right? Then that thing just take you out one sweep. Yeah, we've been there. We've been there, trust me. All right, so quick overview. Key to financial success in trading is, what do you think of money? You should think of it the way it thinks of you. Nothing at all. It's just a commodity that you use to exchange for services and goods the same way you would do with anything in life. Profit gap, where you are in your potential, you're going to see it here first. No one else. Process focused thinking, meaning random distribution. You don't know the outcome of every single trade. You just know over 100 trades, you're going to make money. The amygdala versus the prefrontal cortex, four fears that sabotage us, eight rookie mistakes, try and avoid them. Transforming your mind, how do professionals think when they're trading? Mark Douglas's fundamental truths and his creeds. Then we went into mechanical ways to set up your system and come back from those losses that maybe feel like they're a little bit overbearing, but you come back from those losses and you know, you're gonna take a loss. Just accept it and be able to take the smallest loss possible. Okay. Then, the self accountability framework, you got to be honest with yourself. You got to keep it real with yourself. You know what I'm saying? Nobody can lie to you better than you can lie to yourself. So don't be that person. Okay. Then then the expectations of the journey. How long should it take to be profitable? 8 to 24 months is 6 to 24 months is fast. If you're profitable in 6 to 24 months, that's not normal. Okay. Which means that less than 6 months is even less normal, right? If you're around year five, you should start seeing some consistency, some break even vibes, or you're getting payout once every 3 or 4 months or something, like some type of something that shows consistency around year five. And then after that, you're usually going to transition into profitability, not by doing more, but by doing less. So you're gonna see that, yo, I have something in place that's making me money. If I do less of the dumb stuff, I'll be straight. So how can I remove the dumb stuff? Okay. And then once you get to that point, you will have a defined system. It may not be like me written down and coded in, manuscript, ninja script, and hieroglyphics, you know what I'm saying? But at least you know it in here. And as long as you know it in here, there's nothing that nobody can tell you. Now, obviously, if you want to get it coded and you want to start coding stuff, it has to be on paper, but that's neither here nor there. All right. So I apologize that we took so much time. But if you know me, I just don't know when to shut up sometimes, especially when I'm having a good time. And I'm definitely having a good time. I'm always having a good time. So if you guys have any questions, I'll leave the floor open for up to 15 minutes maximum. But if we don't have any questions, we can go ahead and get on out of here, and I'll send that recording once it's done processing as a live webinar recording, because I am not going to sit here and edit through 2.5 hours like I normally do. I'm just gonna cut the time, the silence in between, but I'm gonna leave everything in. Okay. So we got any questions, any comments, concerns, anything trading related? If you want to talk about the charts, I can pull up the charts. If you want to keep it psychology based, we can keep it psychology based. What's going on? How y'all feeling? How do you guys feel about the information? Talk to me.
And I appreciate everything, even extra time. I appreciate the extra time. So presentation was great.
Appreciate that, man.
One thing I had wanted to say when you was talking about how the success starts in your mind first,
Yeah.
and that kind of hit home with me because I got a couple of there's a few people in the group that are trading partners with me, and we kind of talk back and forth, and that was one of the things that I used to always tell my one of my particular trading partners. It's like well, we've been on this journey for a long time. Our trading
Mm-hmm.
has advanced. We're actually good traders. We're great. I consider myself a great trader. And I was like, just continue being a great trader and the profits will eventually come. And that's exactly what happened. So, I've been consistent for a few months now as far as payouts. And I definitely agree with that. It definitely starts in your mind first.
Mm-hmm. Mm-hmm. That's what's up, man. Yeah. I'm glad to hear it, man. That's the whole purpose of everything I got going on is you know, to hear stuff like that. Anyone else?
Yeah, great job, man. Enjoyed the presentation. Appreciate the extra time. Appreciate you taking time to answer questions. Yeah. So, are you trading just the micros, or you do the minis, or
Just micros. Two if like look at my ATM strategies here. If I click on 10 points, it defaults to one contract. If I click on 5 points, it defaults to one contract. If I got a 50-point stop and a 50-point profit target, it defaults to one contract. If I'm trading the major trend reversal, it defaults to one contract. Everything I trade defaults to one contract. So once I put something on the chart, my initial thought is I'm thinking $2 a point, and then I go up from there depending on how much I'm risking. So maybe this setup, if I take a full loss on here, this is 260. $260 per contract. So I can only go at max two contracts.
Two micros.
Yeah, two micro contracts. Yep.
Wow.
Mm-hmm. Mm-hmm. That's what a lot of people's not realizing. Look at my stop loss. The stop loss on this is 107 points.
Yeah.
All right. I can't sustain a 107 point drawdown trading $20 a point. You know what I'm saying?
Yeah.
If we look at this, here's our swing point. Here's the bar close. Let me see if I can be a little. Let me be a little bit more precise. All right. So let's say we got this right here, and then we got this signal right here. All right. So on this pullback, once this signal came on this pullback, entered. There's a couple reasons we can enter here. Break and retest. Strong breakout, four consecutive bars closing in the same direction with a strong IBS. Failed tested the move 20 EMA moving average. Attempted to break the moving average one time, two times, three times, four times, failed. Every time we broke below, there was a test up that failed, broke below, test up that failed, broke below, expecting a test up that failed. That is the tempo of the market on this day. Sell right here. Initial profit target is 92 points.
Hmm.
How much drawdown? Well, if you got in right here, your drawdown is the high of this blue bar. 11.75 points drawdown, 92 points profit. Now, so just because I got my stop up here and I'm willing to risk that much, I'm never risking anywhere near close. You see what I'm saying? But I'm
Yeah.
trading small enough because the pattern that I'm trading requires that type of stop loss. So if I'm trading too big, once it requires that stop loss, I've destroyed my edge because now I'm over leveraging. So if you're trading small enough where if I trade here and I have a 90 point pullback, 100 point pullback, 150 point pullback, I'm not tripping because a 150 point pullback for me is only $300.
Hmm.
That's the equivalent of what, a 15 point move on NQ. So
Hmm.
while most people are worried about 15 points, I got 150 points to play with to take the same exact trade. Okay, well, you might argue the case, well, you don't want to be in the trade too long. You know, if I sat through this trade for me to hit my profit target, it took me 25 minutes. And then if I wanted to get that longer move, this longer move would have took me an hour. Okay, what's your point? You're not willing to wait an hour to protect your account? You're not willing to wait an hour to go from blowing your account off of a 5 point move or a 10 point move to potentially catching a swing trade that would have made you 247 points. And then you can add contracts along the way. Don't just think I get in on one contract and I just let it ride out.
You add.
Oh, yeah. Oh, yeah. I add whether it goes against me or if I'm in profit. I'm adding either way. You know what I'm saying?
I
So if
got
this move is happening, it's taking off, and I see it, and this is taking off, I'm selling more. Oh, pullback, I'm selling more. Why? Because I can add three, four, five contracts on a strong sell move, have my stop right here or something, and then if it pulls all the way back on me, I just end up break even on the trade.
you. Hmm.
Right? That's how I trade. I trade extremely small. That's just what works for me because I'm in no rush. I'm in no the minute I slow down is the minute I started making money. The minute I slowed down is the minute I started making money. I was pressed for money. I was pressed. I had quit teaching before I was consistently profitable. I just had money saved up and I was living off my savings. And then I started making money and then I got bored. I was like, okay, what do I do with my life now? So I went back to teaching. And then now it's just like I live a very fulfilling life. So, and if you just look at my life, you be like, nah, this nigga capping, that nigga don't do nothing. Yeah, well, it's fulfilling for me. My fulfillment and your fulfillment is not going to look the same, and I'm not trying to convince anyone of that. I'm just saying for me, I've made decisions in my life to find fulfillment in the little things.
Oh, hey, I'm with you, brother.
You know what I'm saying? So if for me, I can just peel back trading $20. And like, look, if you're trading $20 a point, you don't have to downgrade 10x like me and trade $2. Like, you can trade $10 and still make money. You can trade $8 and still make money. Look, let's keep it. Let's be honest. I most likely, unless somebody in here is making a lot of money, is not telling me about it, I make the most money trading in here. And with that being said, who trades $2 to $4 a point? Does anybody trade $2 to $4 a point?
Yeah, I do.
Okay, so that's one person,
Yeah.
two people.
Yeah, I do sometimes.
No, I'm saying you're consistent. Your entry on
Hmm.
your trade, not if you're learning to trade. I'm saying like you're trading a non-sim account in the active live markets where you can make money or lose money, and your default position size is $2 a point, one MNQ
Okay.
contract. That's the question I'm asking.
No, not me.
So nobody?
Yeah, I mean, I
I
trade macros,
misunderstood your
so
question. Yeah, I'm doing two contracts.
Okay.
sometimes I go up to 5 contracts in the micros, but I'm starting out in the micros
Okay. So
consistent.
3 out of 12, 25%.
Five contracts in the micros, but
Okay. So for the other 75%, if you're not making money, just try it out. That's all I'm saying. Just try it out. And if it doesn't work for you, it doesn't work for you. But just try it out. Because
Hey,
I'm
I'm sorry, I didn't mean to
go ahead,
cut you.
go ahead. No, go ahead, go ahead.
What I was gonna say is when I do use it, like a lot of times, like if I have accounts in drawdown and I go to one MNQ, it it helps me bring them back up. So
Mm,
I do use it for that, and it does work. It does work. So I know that trading that one MNQ is actually safer because I that's when I do use it to bring
mm-hmm,
accounts back.
mm-hmm. I tell you something like sometimes when it's like, hey man, I am $20 away from a payout and I just don't feel like dealing with the headache. I just put a hundred point stop loss, 10-point profit target, and I tell myself, look, either I get this payout today or I'm down $200. And I just clear it. I bang it. I just come back at the end of the day and just see what happened. And that's the freedom it gives you because that same scenario, that means you putting up $2,000. I ain't walking away on no two bands. But if you telling me all I need is $20, yeah, I'm getting that $20. I'm most likely getting that $20. But
Oh
that
yeah.
just comes from trading so small, especially with the way the markets have been. Like Monday I made 1,000, Tuesday, Wednesday I made 500, and Thursday, Friday I made 300 per account that I'm copy trading on. Trading at most, the biggest I went was 3 MNQ.
Wow. So you scaled in, you started with one and you scaled in two
Mm-hmm.
and three.
Because the thing is if you get in with one contract on your full position size and you see an adverse movement and you decide to cut the trade, that's going to be significant to your P&L. And you might hesitate on your next trade, and then it might affect your next trade, and you start trading your P&L. So now you're like, okay, I got to get back this loss. So now you're holding your wins longer, and the win that you were supposed to cut into your profits now turn into a loss, and now you got a bigger loss. But had you just followed your rules and took your profit on that trade, then the next trade that set up and won again, you would have been in profit for the day. But because you took that early loss and you're trading your P&L, now you're no longer sticking to the game plan, right? It has this cascading domino effect that truly impacts your trading. So the best way to navigate that is Al Brooks calls it the I don't care size, right? Trading the
Yeah.
I don't care size. Once you truly trade a like there's some people that are like, oh, I only trade 1%. You're like, damn, you only trade 1%. Yeah, but this nigga has a $5 million account.
Yeah.
So let me find this up.
Yeah. So you don't look at your P&L, you trade what off of just points. You had it set on points.
Everything's on points. Points, points, points. This is points. My bot and my chart trader is all points. Everything's points. I don't know how much money I made until I say
Yeah.
I'm done trading and then
Close
I
enough.
pull it up.
I got you.
Yeah, I don't necessarily know. I have an idea,
Yeah.
but I don't actually know the number. Like I kind of have an idea, like, oh, I'm probably around break even, but I don't know if I'm plus. Like break even for me is plus or minus $50. So if I'm plus or minus $50 on an account, that's break even. So I don't really think about it too much. And then
Yeah.
I kind of have a gauge where it's like, okay, if I take a trade and you know what I'm saying, it starts going my way like this, and I start adding two or three contracts, and then I get another sweep, I kind of have an idea because it's like, okay, I'm up 100 points on three contracts, so I'm up like around 600 right now. How much of that do I want to take off the table? So then, on my bot, I hit close 50%. I take half off the table, put my stop loss probably like $50 in profit. So, it's a $200 trade or whatever, worst case scenario. And then it's like, okay, I have $200 locked in and I have 600 on the table total. What am I going for? And then I might go for $1,000. And then it's like, okay, I need 400 more points $400 more dollars off of these two contracts. Am I going to be able to get that? Probably not. So I have an idea, but in general, I just completely ignore it. And I usually have no idea at all. None whatsoever. I
Yeah.
just I just trade the chart, and then if I want to trade, if I'm feeling like I'm having a good trading day, I'll just increase my position size slowly by slowly, and
Yeah.
then you know that's it. I just make my decision based off this, what the price is doing. I don't really too much focus on the P&L. I just know that right now I got these 10 accounts or whatever, however many accounts I think I got, like 10, 12. And then I got like, I'm gonna start doing TPT accounts and I've heard like about Lucid and Blue Linox and all these. And I'm gonna start, building beyond just 20 Apex accounts. Like let's probably
Yeah.
get to like 50.
Yeah. So you only trade Apex?
Right now, yeah, because I wanted to get 20 accounts to rotating payouts where they're
Mhm.
all, at that no more trailing threshold. Every $500 you get a payout.
Yeah.
And then what I do then is I put them all on the copier and I go for 60 to $100 a day. And then within 10 trading days, I can request a payout. So
Okay.
it lines up with being opposite my bi-weekly payment at the school job. So if I get paid at the school job this week, I'll wait for my payout to come the next week. And that's just the system I got in place.
Paid every week.
Huh?
They're getting paid every week.
Yeah. But um so far for February, well, I say so far for February like it's a lot. It's only been 1 week. I would say I haven't gotten a payout in February. In January I got two payouts. December like three. Every month I get at least two usually. This month I may only get one because
Your volume is going down.
Can't hear you. Your volume out.
Your volume is out all the way. Yeah.
All
Well,
right,
I
so
appreciate you showing me this because, yes, mentally it's like I get in my head, I overthink it. I still have not passed the evaluation yet, but I overthink it, and then I'm going in good. Sometimes the trade will happen and it gets me out at my profit, and then I try to jump back in, but it's too late because it's up too high. Then,
mhm.
like you said, then it starts going against you, and you're like, oh. Maybe I'll stay in, and then it's like it kicks you out, and that's it.
Mhm. Well, the beauty of it is you've already outlined and defined the hole in your trading system, and all we need to do now is correct it. So after you hit that first profit target and you get back in, ask yourself, why are you so eager to get back in? Or maybe create a cool down system where after you hit your profit target, you're not allowed to take another trade for 10 minutes. Put something in that space and stay disciplined to it and follow it. And if you break that rule, create catastrophic consequences. For me, my consequences were I'm just not allowed to trade anymore at first. And then if I had two consecutive, like say I tweak on Monday, can't trade on Wednesday. I mean, sorry, tweak on Monday, can't trade on Tuesday. Tweak on Wednesday, my week is over with. So put something in place like that, and that's the easy fix.
I'm gonna do that.
Mm-hmm. Mm-hmm. Find a reason. Find a reason for you to not take the trade after you make money. Go for a walk, get a drink of water. I don't know, what the situation is, if you trade at home or you trade at work or whatever, but whatever it is, after that first win, give yourself some cool down. That's a common mistake. I went through that too. I never wanted to cool. I was like, damn, I made 100. Let me make 200. Let me make three. Oh, damn, I'm down 800. All right.
Right, right, right,
I guess I should have stopped at three. That was the
right.
number.
Yeah, exactly.
All
That's why
right.
I sometimes just shut down my Ninja Trader
Mm-hmm.
altogether,
Yes,
and then
yes,
I'll
ma'am.
stay on the call with Cornell because I'm like, yeah, no, I'm
Mm-hmm.
out of that already.
Yes, ma'am. Hey, whatever you got to do to prevent yourself from doing something stupid.
But now, when you do this MNQ, okay, you still trading in the same direction you would have been trading in the regular NQ, right?
Yeah, it's the exact same chart. The only difference is instead of it being $2 a point, it's $20 a point. It's literally the exact same thing. Like
Hmm.
the charts are literally identical. There might be every once in a while you'll see a difference, like maybe there'll be a tick here or a tick there, or this bar might close like that and that bar might close like this. That's just because of the exchange or whatever. But let me do this. So this is February 6th. This was Friday on MNQ. So if we go to NQ, oh, damn, I replicated the whole thing. I didn't mean to do that. Oops. Let me just do this. All right, so if we go to NQ on the same exact chart, so this chart right here that I'm showing you right now is actual NASDAQ.
Hmm.
Uh, this chart right, actually, I got a better idea. I know what I'm gonna do. Let me just do it like this. Give me a quick second so you can see the parallel. I hate that Zoom. You guys can't see it, but Zoom up here has this green line, and I'm so used to dragging stuff to the top. But when I drag it up to the top, I can't see what's up there, so it's like screen getting cut off. It's so
Yeah.
weird. So I'm pretty
Okay.
sure you can see the resemblance.
Hmm.
The top being NQ, the bottom being MNQ. For the most part, you're gonna have to study this chart really, really in depth to see what differences there are. Because for the most part, you know, you probably might be looking at bar size maybe. All the signals are painting the same. Yeah, on this day, it looks like pretty much all the signals were identical. All my paint bars were identical. All the overextension was identical. Add bar, doji. Okay, so here's one nuance difference. Um, this move right here painted a outside bar follow through with a dot. So oops. So this bar right here, bar 45. Let me see why this is doing that. Give me a quick second. Boom. Okay, let me see data series real quick. That's weird. Hmm. Let me reload this. All right, there it is. Yeah. So if we look at so on NASDAQ, if you look at bar 45, it didn't meet the criteria of a signal, but on MNQ, bar 45 did meet the criteria of the signal. And the criteria is so this bar, oops, this bar 44, you see how the low of bar 44 did not go below the bar before it? Can you see
Mhm.
that?
Yeah.
This bar did not go below the low of this bar, but it did go above the high. So for this to be an outside bar, it has to go above the high and above the low. On MNQ, if we look at that same bar, it went above the high and barely. Oh, actually, this one is even crazier. This one is equal lows. So they have the exact same low. So it barely met the definition. So this is literally the difference of a signal by one tick. So you might have that where, there's a tick difference, but in the grand scheme of things, if the pattern is good and the pattern is strong, you're going to get the signals on both charts regardless.
So I saw where you know how you set the ATM up on the well, MN the NQ, but when you did it on this P&L, how did you set the ATM strategy? I see it says MTR. What did you do to
All right. What I'm going to do right now, real quick, is I'm going to end the recording here and then I'm going to answer your question because that's kind of going away from what we were talking about.
okay, all
So
right.
I'm going to stop it right here.